Hello and welcome everyone. So today we are going to discuss about qualifying loan interest. So what is qualifying loan interest? So whenever you take a loan for any qualifying purposes, which we will see today, what are those qualifying purposes? Then the interest you incur on them is available to be deducted against total income. Okay, it is available to be deducted against total income and before any relief or any personal allowance. Okay, so if I show you the exact place where this qualifying loan interest stands is here. So you deduct this from total income. Personal allowance would be claimed later on, loss relief would be afterwards. Okay, another point here you need to understand is this type of interest cannot be carried forward. Okay, so let's say in the current financial year you have income of 5,000 pound. Okay, you have just income of 5,000 pound. The total income is 5,000 pound, and you have a qualifying loan interest of let's say 7,000 pound. Okay, so 5,000 pound total income less 5,000 pound of 5,000 pound of those qualifying loan interest would be deducted, right? Whatever is left is 2,000 pound. Now, this 2,000 pound cannot be carried forward. This 2,000 pound cannot be carried forward. It is not like that. In the next year, I have much more income. In the next year, I have much more income. So I would be carry forward and adjust it against that. You can't do that. Okay. Okay. So let's see what are the qualifying purposes. Purchase of an interest in partnership by a full equity partner. So if someone is a full equity partner in a partnership firm or a prospective partner, okay, it can be it can be any way. Okay, so let's say you are currently holding share in a partnership firm. Okay, you need to buy some more share. Okay, you need to purchase some more interest, some more stake in that business. So you would qualify when you take the loan you would qualify for that interest, okay, to be deducted against total income. Either you can also be a prospective partner. You are not currently a partner, but you take the loan with the intention that you will become the partner of this firm. Okay, this relief is particularly useful to new partner borrowing money to finance their investment in the firm's capital. So let's say person A opens a partnership firm. He offers person B to join with him, but person B does not have sufficient capital. Both needs to bring 5 lakh pound, let's say. Okay, both want to bring 5 lakhs pound. Okay, but person B does not have enough money. So what he does, he borrows that money. He borrows that money to finance his investment. Okay, to get the stake. So the loan taken for that purpose. Okay, so whatever the interest he is bearing on that loan would be deductible. Okay, so let's say Rohan borrowed money for investment in his partnership business with Mohan. Then that interest paid on loan is deductible from his total income. Perfect. Okay. Next is purchase of plant and machinery by a partner on behalf of their firm. So if I'm a partner and I purchased a plant for my business, okay, I took out loan of 1 lakh pound with an interest of 7% for 10 years. So I would be able to claim 1 lakh into 7 percentage, 1 lakh into 7 percentage, which is 7,000, which is our qualifying loan interest. Okay, but here the catch is that you only have available 4 years. Okay, this interest relief is available just for 4 tax years. After that, no deduction is allowed. So even if you have taken the loan period is 10 years, you still would be able to claim this deduction for just 4 years. After that, you can't claim it. Okay, so this is the limitation for it. Next is the purchase of shares in a closed trading company. So, what do you mean by closed trading company? This we would see in detail in some other lectures, but as of now, you understand that when there are five or less than five shareholders, then we call that company as closed trading company. Okay. So, when you purchase shares in that closed trading company, okay, Okay, you are purchasing shares by taking loan for that closed trading company, that would be allowed. Okay, but there again is a condition: you should not be claiming, EIS or SEIS relief, enterprise investment scheme, and seed enterprise investment scheme. Okay, I guess I'm taking the name correctly. Okay, we would see it later on when we cover the closed trading company part and SEIS and EIS relief. Okay, we would be covered it later on. Okay, next is purchase of shares in an employee owned company. So if a company is employee owned, okay, then the purchase of that would again be qualifying loan interest. Okay, and here the same condition applies. If you have taken EIS and SEIS relief, so you won't get this as a deduction. Why that is so? Why that is so? Because you are already taking the relief. You can't have two reliefs on the same thing. Okay, and now if we want to understand what is the purpose of HMRC being allowing this type of loan, so like let's take the example of me purchasing stake in a partnership business. So with that, if I borrow money, although HMRC is giving deduction for that money, I am infusing capital in the market and I'm infusing capital in the business, in the economy. I would earn taxable income from it. I would earn taxable income from it, and HMRC would tax it. So for that, they are now allowing me. To get this relief. Okay, because in the future point of time, I would be able to contribute to the economy by paying tax. Okay, perfect. Now let's see a sole example here, and then we will wrap up this session. Okay, this short session. So Allies is a partner in a partnership firm. Again, a partnership example. She had the following income for the tax year 24-25. Okay, so two types of income were there. First is share of partnerships tax adjusted trading profit. So the share is uh, the total share, okay, is 54,500 pound. Okay, bank interest is 1,000 pound. Okay, during the tax year 24-25, allies paid 2,000 of interest on a loan taken out in 2016 to finance her contribution to the capital of the firm in which she is partner. Okay, so currently, from which company she's, which partnership firm she is earning the trading profits? She borrowed a loan earlier on in 2016, right back to 2016. She is bearing interest of 2,000 pound on that. Okay, 2,000 pound of that. So let's see how this works on. Okay, so let's put everything in the table to get everything in the table. Let's bifurcate it into non-savings and savings income. We do not have any dividend income here. So trading profit was 54,500 pound. My bank interest was 1,000 pound. So my total income is here. Okay, my total income is here. So we have qualifying loan interest. Is it 2,000 pound is what qualifying loan interest, because he purchased to contribute capital to the firm. Okay, and this you can see is deducted from your total income, not your net income. Okay, not after your net income. Okay, so personal allowance is afterwards. Personal allowance you will get afterwards, deducting this qualifying loan interest. So you get the net income here. You apply personal allowance, so your taxable income is 40,930 pound. Okay, so 2,000 is reducing your total overall income. So now let's calculate the tax. Okay, so firstly, for 37,700 pound, we have 20% tax, the basic rate. Okay, if you are still confused with the tax rate and the calculation, move to our previous videos firstly and then continue with this one. Okay, then so we have exhausted the 20% limit. Now let's move on to 40%. Out of 39,930 pound, we have calculated tax on 37,700 pound. So the difference would be taxed at 40%. Okay. Now what is left is savings what is left is savings income. Okay, £1,000 was our savings income. Okay, and again for the qualifying loan interest, you need to understand that you cannot apply this qualifying loan interest first to savings, then any like in any order, first to savings, then dividend, or non-savings, or this. Like you firstly need to start as we did in personal loans. You firstly need to start with non-savings income and then move to savings income, and then at the end move to dividend income. Okay, clear? Okay. Okay, for interest income, if you can see, our total income was 4930 pound. Our taxable income was 4930 pound. So where do we stand? We are in higher rate band. Okay, higher rate band. So would we get some nil rate band here? Think of it. Yep, yep. There would be nil rate band of 500 pound. So out of 1,500 pound is covered by nil rate band, and the remaining would be taxed at 40%. Perfect. Okay. So if we calculate the total tax liability, it is 8632 pound. Okay. So this is how the calculation works here. So this was the session for us today. If you have any doubt on this topic, let me know. Okay. And further videos, we are going to discuss about spouses and child, how the taxes work for spouses and civil partners, and how does the income of minor children is taxed. Okay. So this was what we did for today's video. We will continue with next videos. Till then, share our videos, like our videos, and comment down if you found it interesting, if you would like us to continue this series. I'm aware that some of might uh, be completely dependent on this type of resources on YouTube. Okay, but I cannot commit any specified date so that this whole ATX could be completed. I do not know when I can complete it because I'm currently in a full-time job and I do have other things to do as well. But still, I'm trying my best to contribute something to my community, my ACCA community. So this was it. You can follow me on LinkedIn. You can join our WhatsApp group. So if you have any specific doubt, you can ask us, and many more things regarding jobs. We also post jobs there. So yes, this was it. Thank you. Bye.